Hi, Jake Dozer, Certified Financial Planner with Johnson Brunetti, and we're here today with the Money Wisdom Question Series. Today's question is this: what are the types of long-term care insurance policies out there? When we're looking at long-term care insurance policies, typically there are two main types that exist. The first one is sort of traditional long-term care insurance. This is most akin to the type of insurance most people are used to buying nowadays. It is use it or lose it. Think of, if you would, term life insurance, where you use it for a period of time, and if that policy expires, it's gone. Or think of your car insurance. You pay a premium, and hopefully you don't get in a car accident. And when you're done paying the premium, you no longer have coverage. That's what long-term care traditionally is looked at. You're paying a premium, and at some point in the future, if you no longer pay for it, or you pass away with that coverage and never used it, the premiums you paid are gone. Now, as you could tell, based on the way I described that, there is a downside element of it, in the sense that your premiums vanish, if you will, if you never use them. But isn't that what insurance really is insuring against what is unlikely or less likely than living everyday life, and those premiums go away, but the reality is they are far cheaper than other forms of insurance. On the flip side, the second type of long-term care insurance out there is what are called life insurance, long-term care insurance hybrid plans. Let me tell you a little bit about them. Here's what you're buying in that world. You're buying a life insurance policy where you're able to access the death benefit prematurely to pay for things like long-term care. The reality is the primary vehicle is a life insurance policy, and the secondary feature is a long-term care policy to pay for nursing home situations. Now, when I say to pay for nursing home situations, one of the things that you need to watch out for when you're looking at policies like this are, what are the stipulations of how these things pay out? Do they pay for long-term care? Do they pay for home health care, which is a very different cost structure? Even though most people prefer it, not all policies cover that type of thing. Would they reimburse me for the care that a family member provides instead of me hiring somebody? Do they pay that company directly, or do they reimburse me for those costs? What type of qualifying events need to be triggered in order for the policy to pay out if I go into some sort of facility? Does it have a cost of living adjustment built into it to combat inflation or the rising costs of healthcare? How much is my daily limit? How much is my monthly limit? How much is my annual limit? And what is my lifetime limit? As you can tell, there's a ton of levers, there's a ton of switches to flip in these types of policies. And making sure you have a plan that is appropriate for your situation needs to be a fine-tuned process that you talk with a financial professional about before you buy a policy flippantly. So the reality is two types of policies: a traditional use it or lose it policy, if you will, and a life insurance long-term care hybrid policy. Which one's right for you? Make sure you talk to somebody who's building an overall financial plan to make sure that you have the right information. Again, this is Jake Dozer, Certified Financial Planner with Johnson Brunetti, with today's Money Wisdom Question Series. If you liked our video, be sure to give it a like and share it with somebody that you would find value in it as well.